So today, right, basically we're going to do these 3 Singapore REITs to watch, okay? The REITs Real Estate Investment Trust to watch in 2025. Okay, so for some people who don't know what is this REITs is Real Estate Investment Trust. Okay, so most of the time people will buy this and hold it for dividends or price change. Okay, price change means capital gain. So first question is it possible, right, for REITs to be one of the best performer in 2025? Okay, so that's the question that a lot of people will ask. But okay, over here, I just want to share with you, okay, what's my view. Okay, so first thing, okay, why REITs? So for the past few years, right, interest rate has been going up. So when interest rate is high, REITs, right, it's actually the price of the REITs is going down. Okay, example, if the REITs is giving 6% dividend and banks, the fixed deposit is 4%. So 4% is risk-free. So 6% is not very attractive. 5% is even not attractive. So what happened? A lot of people sell away the REITs and the money go back to the bank. Okay, so why is it interesting for REITs right now is we are going into this era where interest rates start to go down. Okay, so right now this is a new era. It just happened in late 2024. So the interest rate going down, what happened? REITs start to go up. Okay, why REITs start to go up? Because when interest rate go down, REITs, okay, Real Estate Investment Trust, this company, right, they can be more aggressive, borrow more, they can buy new property, and with that they will increase their dividend yield. And with the potential increase on the dividend yield, the REITs, kind of like expect to move lah. Okay, so basically what is already happening right now is we already see some REITs is moving. Okay, some REITs is moving, and for me, right, okay, I think this is a good time. Okay, it's a good time to start watching. Okay, good time to start watching. Of course, some people say, yeah, already up 1-2 months. But okay, if you know what happened, right, previously, okay, over the last 10-15 years, what happened to the REITs, okay, REITs sector, you will find that, hey, if you enter at the correct timing, maybe you just need to buy and hold, and then you just for a long term, you can just hold on and just collect dividend, passive income from these REITs. Okay, so over here, I will share with you how to select. Okay, how I select. Okay, and basically I'm based on this mostly based on my screener. Okay, my screener. Okay, so over here, let's get started. So of course, okay, there's a lot of people that are looking for like different stocks, right? But today we just look at the REITs first. Okay, REITs first. So over here, okay, this screener is to screen out this thing called stage 2. Okay, so what is stage 2? Stage 2, right, is basically, okay, I want the stock, right, is in the stage 2. Okay, stage 2 means the stock, right now is on this uptrend. Okay, so if the stock is on a downtrend and then just starting to go up, this is stage 1. Okay, stage 1. So stage 2 is already on the uptrend. Okay, already on the uptrend. And over here, we don't want the one in stage 3. Stage 3 is falling, and stage 4 is going down. Okay, we don't want stage 4 also. Why? Because the market right now, okay, is on stage 2. Okay, it's on stage 2. So we want to find something on stage 2. Okay, so in terms of the REITs, right? Okay, if you want to see what is the REITs that is the most actively traded, okay, okay, I will say that it is this one. Okay, so you look at the industry, which is Keppel DC. Okay, Keppel DC. Okay, so Keppel DC, okay, qualify for the first round in terms of the most, okay, actively traded to date. Okay, so DC, some people don't know. Okay, not everybody know, but I think most people know. DC is what? Data center. So when you think about data center, okay, you link to what? The keyword AI. Okay, AI. So if you are somebody, right, looking for AI related real estate, then what? You look for data center. Correct? Okay, so AI, data center. So this is something like, kind of like, okay, like maybe there's a team. Maybe the market like the AI one. Okay, so anyway, okay, I just put this in the contestant first. Right, contestant first. We summarize later on. Okay, but over here, Capital DC came out to be the one of the highest traded REITs. So we go down the list. Okay, go down the list. You will realize that there is this Kaplan Escort. Okay, Kaplan Escort. So Kaplan Escort also one of the actively traded. Okay, actively traded means like today, right? There is a trading volume. Today there's a trading volume. So when you see there's trading volume, it doesn't mean that this stock is the best. It just means that this could be the favorite. Like example, Capital DC got 9 million, but today it's actually down. Okay, so there's a selling. There's a heavy selling today. Okay, it doesn't mean that it is the best, but later on we will decide. Okay, so Kaplan Escort Trust, okay, have also one of the actively traded. Kaplan China, okay, also one of the actively traded. Okay, so if you want something that is cheap, right? Okay, Kaplan China Trust, right now is cheap. So for short term, if you want to buy low and then with the rebound you sell away, maybe this Kaplan China Trust is a kind of like a trading stock. It's a trading stock, but it's not my kind where I want to hold for like a mid-term. It's not my kind that I want to hold for like long term, because this one is volatile, you see. Okay, so over here, okay, let me just do another screening method, which is to rank by the power. Okay, so when I rank by power, right, okay, you notice that Capital DC come out again. Okay, so in other words, Capital DC definitely qualify as the one of the stocks. Okay, definitely qualify because both the transaction, okay, whether this is a favorite stock or not, okay, it qualify, and performance. In terms of performance, Capital DC also is another winner, okay, because it ranked one of the highest in this what we call this power, okay, in terms of the power. Okay, so going down the list, okay, there's another one, Kaplan India. Okay, Kaplan India. Okay, so this one, right, okay, personally, it might not be comfortable because if you are not from India, you don't know what is really happening. So some people, they might look at this, okay, yes, it is performing well, it is good, there's a smart money, it is stage 2, but sometimes we might not be comfortable. So we go down the list and we find the next one. Okay, so India, we skip this lah. Then we go for the next one. So which is Parkway Life REITs. Okay, Parkway Life REITs. Okay, so over here for short term, there is a pretty strong pullback, which also give you an opportunity to buy at a discount. Okay, buy at a discount. Correct. And what is good thing about this Parkway Life is it is healthcare REITs. So if you're somebody who like to diversify, which is like you are not trying to put every egg into the same basket, then of course Parkway Life is actually one of the best these healthcare REITs in Singapore. Okay, in Singapore. Okay, so of course there's another one, First REITs. Okay, so usually people who trade REITs, right, they will compare. Okay, but I can tell you cannot compare Okay, cannot compare. So why? Because one, like Parkway Life is a $4 kind of a stock, right? First REITs, right, is a 27 cents stock. Okay, so how you can compare equally, right? And First REITs is like under Lipo. Okay, is it still under Lipo? Okay, let me see. First REITs, Lipo. Okay, so First REITs, right? Okay, it's under like Lipo. Okay, So which means what? Which means there's some kind of like overseas counterparty or shareholder or this like there's some kind of a risk lah. Right? There's some risk. Understand lah? So and you can see the history of this first REIT, right? Wow. Okay. Also quite scary. From 40 cents, it dropped all the way down to 10 cents. So the retracement is pretty deep. Okay? In other words, previously in 2018, when the interest rate, is going up, these REITs dropped like tech stock, dropped 70%. Right, dropped 70%. So in other words, okay, first REITs cannot compare because it's considered pretty high risk. Very high risk. And if you are somebody who are preferring, like something that is steady one. Okay, so Parkway Life is actually something that didn't, like resilience during the bad times. Okay, so I personally I like this Parkway Life. Okay, I like. Okay, why? Because if you look at the long term, you can see that this one this money sign below is all the dividend. If you've been holding since 2012 until 2022, basically you just like collect money every few months lah. You just collect the dividend, collect all the way. You see what I mean? Okay, which is very good lah. The price go up and your bank account still receive extra dividend. Correct? Okay, so no need to say anything. Okay, number 2 is Parkway Life. Okay, correct? Okay, so one more to go. So let's move on. Okay, so second rank, number 2 is Parkway Life. Okay, for me personal my preference. So what I do is I will go down and see what is the next REITs that I will see. Okay, so the next REITs is Escort. Okay, Escort. Okay, so personally, I'm not very sure if this is really the best, because maybe some of the REITs is in stage 3. So let me see if some of them is in stage 3. Exactly, the some is in stage 3. Okay, so what's the meaning here? Stage 3, which means there are some REITs, right, that is actually having some kind of a pullback. Okay, just like Singtel is having some kind of a pullback. So which means the past 1 month it has been a correction for Singapore stocks. So some of these good ones, they also pull back. Okay, they also pull back. Okay, so the third one, right? Okay, maybe I will look out. Instead of Escort. Escort is like a hospitality REITs. Okay, so usually if you look at office space or shopping mall, I prefer office and shopping mall more than like hotel, okay, kind of REITs. Okay, so anyway, okay, if you look at, like, let's say Suntec, okay, is Suntec performing well during this July to September? Okay, seems like yes. Okay, and over here, what about the pullback during this 2022 to 2024? Okay, so if the good one, they will not pull back so much. Okay, so if this pull back 37%, maybe you need to minus point. Okay, if you see like Maple Tree, okay, during this pullback, this one pullback longer period, which means what? Which means worse than the just now the Suntec. This one pullback 40% and pullback since 2020. Okay, so this Maple Tree Pan Asia, okay, if you ask me, is it really good? Suntec is actually better. Suntec is actually better. Why? Okay, because Suntec actually move up faster. Okay, when come down fast as well, but go up also fast. So what you want during this period, when the market go into stage 2, when REITs go into play, is you want something that move up fast. Okay, move up fast. Okay, so over here, one of the potential is Suntec. However, if you look at this right side, right, you see that there's a pink color, there's the top one. You see or not? There's a pink color line, there's the top one. In 2023, it go up fastest. Okay? In 2023, when it go down slower than the rest. Okay, do you all see the pink color line? See or not? If you see the pink color line and you type yes, okay, you will observe or not this pink color line. Okay, so this pink color line, okay, you know, when it drop the slower, right? And then after that, when it recover here, also recover quite fast, and it break new high. Okay, it break new high. Correct or not? Okay, so what is this pink color? The pink color is land lease. Okay, and land lease is only 60 cents. Oh my god. Okay, so it's very hard to choose right now. Okay, but okay, let me just see one more thing is during the pullback, what is actually happening. So again, and during this period, 2022 to 2023 is also down about 30-40%. Okay, so in what's happening here is you notice that Suntec, okay, is down 40%. You notice that Mapletree Pan Asia is also dropped about 40%. Okay, so drop 40% is normal. It's normal. Okay, it's just that the rebound here, who rebound the fastest, okay, and who is the most resilient. So seems like land lease is actually quite okay. Okay, some of you might not know land lease, but for me, it's a bit quite familiar because our office is in Jurong East. Okay, so land lease is GEMS. So we go GEMS very often. We go GEMS very often. Okay, so again, wow, it's a quite a close contestant. Okay, so maybe the number third one is this land lease. Maybe. Okay, so if you look at power is the, you know, also one of the criteria to look at it, and sometimes you look at the market cap, you know, whether is it is good or not. Okay, so before I make the last decision, right, I also want to look at Fraser. Okay, Fraser. So Fraser, okay. So if there's something that is near the high, okay, near the all-time high, okay, I will look at this like ultimate bull. Okay, I want to see if is there any REITs that I didn't see that is near the high, right? Okay, so over here, Capland Integrated Commercial Trust. Okay, so maybe, okay, we don't have to choose the rest. I think land lease also lose already. Okay, land lease also lose already. This is the winner. Okay, so CL, okay, Capital, Capland Integrated Commercial Trust. Okay, so number 3. Okay, in fact, maybe this is number 2. Okay, so the ranking. Okay, so this one, right, is the number 3. Okay, number 3. Why? Okay, number 1, because if you look at all these chart, right, they are not as uptrend as this one. This is the most uptrend one. Okay, and this one is above Fraser. This one is above Paragon. Okay, of course, Paragon can be as good as well. It can be as good as well, but Paragon, the trading volume is very low. Okay, so Paragon is comparable. If you look at the green line and the blue line, is pretty much both is uptrend. Okay, so for this one, okay, you notice that, okay, these 3, right, they are not very like, you know, bread and butter kind of REITs. Why? Because these 3, one is data center, the other one is healthcare, hospital, right? Healthcare. Okay, and the third one is retail. Okay, so which means it gives me a diversification, and also, you know, like a little bit of like more volatility. Okay, it's not like office space, boring kind of, you know, a bit boring. The office is a bit boring. Ascenders of this something. Industrial also a bit boring. So these 3, okay, is a more interesting. Okay, so what do you think? Okay, what do you think? Let me know if I, you know, if you have any comment, just put down in a comment. Okay, what others, what will you choose? Okay, so first part over here, I've done this topic. Okay, 3 Singapore REITs to watch 2025, and what we are going to see is just follow through in the next year 2025. What will we choose? Okay, so for me, Capital DC, Parkway Life, Capland Integrated Commercial Trust, and this is the 3 Singapore REITs I will be watching.